Hi, everyone. Welcome to the session on driving the triple bottom line using sustainable finance to unlock opportunities in your business. My name is Uhren. I'm head of sustainable finance products and strategy at Bank of Montreal, and I'm joined by my colleague, Janine. Janine, can you introduce yourself?
Sure. I'm Janine Sekulic. I'm the National Director of Agriculture here at BMO.
Thank you. And we are excited to talk about all things sustainable finance today. And I think before we even dive into the topic, which is really a fascinating and really top of mind one, I think it makes sense just to spend a moment on sort of level setting. What is sustainable agriculture? What is sustainable finance? And what is this triple bottom line that we're referring to? So I'd like to take a minute to touch on that, take a minute to talk about why it matters for Canadian farmers and producers, talk about what BMO is doing to support our clients, and then talk about the opportunities that it presents for you and your businesses. So very quickly, when we think of sustainable agriculture, really what it is, it's about meeting society's needs today without compromising the needs of future generations to do the same. And that can take the form of, creating and preserving a healthy environment, maintaining economic profitability, very important part of it, and enhancing social and economic equity. And I'll break these down a little bit more. So when we think of a healthy environment, what's the impact on the land of the different operations that our clients are creating and operating in the Canadian landscape? Will the land be tillable into the future, or how are animals treated on your farm? These are all the types of considerations that we're thinking about when we're looking at whether there's a healthy environment associated with our clients' operations. Maintaining economic profitability, extremely important. You often probably hear about sustainability or sustainable agriculture as that focus on that first one around healthy environment. But economic profitability and viability is every bit, if not more important. Because if you're not viable economically from a profit-wise perspective, then you're not going to be in existence in 5, 10, 20 years. So who cares how well you're doing for the environment? You really need to focus on ensuring that your bottom line is doing well and is healthy. And finally, social and economic equity. Are you providing paying jobs that benefit members of the community? Is your family farm profitable enough that it can pass on to the next generation? Or is the next generation fleeing to the city? For your workers, do you have safe working conditions? Are your animals treated well? So this all goes into the third column of sustainable agriculture around this idea of social and economic equity. Now, it's important to note that the idea of sustainable agriculture, it's not new. Farmers have been thinking about supply chains or nutrition education or cover crops or water management for hundreds of years. But there are some areas of sustainable agriculture that are new, frankly, and things like the use of biofuels or organic farming and certification or zero emissions transport or carbon capture technologies. Some of these ideas are new. And I think it's important for our clients and for a lot of you listening to really understand what the opportunity is associated with these new ways of production, these new technologies, frankly, ways that can help your business save money. And again, coming back to that, maintaining economic profitability, the second pillar of sustainable ag, be profitable over the long term. So very quickly, why is sustainable agriculture suddenly in focus, right? I mentioned we've been thinking about it for a long time. You've been thinking about it for a long time, but it's suddenly in focus for a number of reasons. For one, customers. You have customers that are demanding food traceability, for example, or the ethical treatment of animals. And they're starting to align their purchasing decisions directly with some of their personal preferences, not wanting to buy food or buy inputs from a company that doesn't have a good track record related to their animals, to the environment, to their employees, et cetera. So definitely customers are a huge part of this, and we're starting to see the shift. I think we'll see it more into the next century as well. Investors. So this is now for both public investors, private investors, even lenders are starting to align both investing as well as lending decisions around some sort of ESG criteria. So on the investment side, as an example, you have over 100 trillion AUM in investors that have signed on to what's called the United Nations Principles for Responsible Investing, or PRI. Now, the PRI requires investors to at least integrate ESG, environmental social governance considerations, into their investment decision-making, and to really work with the companies that they invest in to ensure that they're not really bad performers from an ESG perspective. So naturally, we're seeing capital flowing on the investment side into companies that are focused on sustainable agriculture, that have a good track record related to ESG. On the lending side, banks like BMO and others are really focused on driving opportunities for our clients. And to the extent we can align capital or financing around some longer term sustainability goals, that's a win-win for us as a lender and certainly for you as a borrower. And we'll definitely dive into this idea around sustainable financing a bit more in the second half of this discussion. And finally, regulators and government are a huge push and pull, if you will, on the market around sustainable agriculture. So in the US, as an example, you have regulations from the SEC on the Task Force for Climate and ESG considerations, the Network for Greening the Financial System, these regulations that are coming from the president down saying we need to be looking at the impact on the environment of the way that society operates, and agriculture and food is squarely within the president's vision in terms of ways to green the financial system. In Europe, you have a farm to fork strategy, which is part of the Green New Deal in Europe. It's essentially a fulsome regulatory shift towards a more sustainable food system, and has the backing of the EU and the government there. And finally, in Canada, there's work being undertaken on the National Index on Agri-Food Performance, which BMO is a participant in, that really is working to outline the key performance metrics associated with sustainable agriculture in an effort to paint Canadian agri-food producers in as good a light as possible. We want to be able to tell the story globally that we in Canada are great ESG performers. We're family farmers, we're small companies, we're focused on the environment because we have some of the highest regulatory thresholds in the world. We're also focused on animal welfare and preserving the land, back to the earliest point around a healthy environment, preserving the land for future generations. Now, when we think of sustainable agriculture, it's both around risks and opportunities. So on the one hand, ESG risks, things like energy management or waste to landfill or pesticide use. These are risks where if an agri-food producer isn't thinking about their waste to landfill, as an example, or isn't thinking about energy management, maybe the electricity they use to power their operations, that could have a serious impact on their profitability over the long term. Similarly, from a social perspective, working conditions of employees. If employees are unhappy working in the manufacturing facilities or all the way right down to the farm, it's going to be really hard to attract and retain those employees. And there's going to be a bit of a shortage in skilled workers. So it's certainly something in the social area that's really critically important from a risk perspective. But where I think the conversation gets interesting, and I'm alluding to the fact that we'll explore it a bit more in the second half of this session, is around the opportunities associated with doing those environmental and social type performance. If you do them well, how can that unlock profitability for your business? How can that save you money from an efficiency perspective? Maybe you're using pesticides. You maybe have an energy management system that allows you to use less electricity or use more from renewable sources. And this can impact positively your bottom line. And so bringing it full circle, the triple bottom line that I alluded to in the title of this discussion is really around environmental and social performance, absolutely, very important. But economic viability and economic performance is every bit as important as the part of the triple bottom line. And always when we're talking to clients, we have their best interests across the spectrum in mind. And want to talk a little bit more in the second session around how we can finance operations with that triple bottom line very much in mind. But perhaps I'll pause there, Janine, and hand it over to you now.
Thanks, John. So I don't want to, go back over a lot of the same ground that John has already covered in terms of BMOs, of why this is so important to BMO. But I do want to put a little bit of an agricultural lens on it. I'm a farm girl from northwestern Alberta, and John and I have talked about this a lot over many discussions over the last year or so. Initially when BMO started to make some pretty bold commitments around our commitment to climate, around sustainable finance, and that sort of that sort of world. I was skeptical about it. I was defensive about it from an agricultural sort of industry perspective, thinking, well, come on, like we are the original environmentalists. Like we are deeply committed to to sustainable practices and to taking care of our people and our communities and all that sort of stuff. It's just sort of natural. But then as I started to attend more, conferences in different parts of the bank, to, listening to investors and what they were asking for, I started to realize that that climate change and the attention on agriculture's contribution to it is a risk to how we operate. It's creating new risks for our customers, and it needs to be front and center for us in the agriculture vertical here at BMO. And some of those risks are from an industry perspective, potentially the loss of tools, thinking about, pesticides or technology, genetics, facilities, changing the way that we raise livestock, those sorts of things. Loss of control in terms of policy, governance, regulation, and loss of markets, potentially. If we've got, people who are selling inputs to the industry or purchasing our production and aren't aligned with how with our practices, or we aren't aligned with what is perceived as or out there as the right way to do things, we potentially are losing markets. There's potentially an impact on our ability to sell anything, right? So, but then as you take a step back and think where we are at in this process, or where we're at in this conversation, these could actually be opportunities. I think that, I think again, from the ag standpoint, we think, and as John has mentioned, the National Index for Sustainable Ag, the opportunity is differentiation, or that Canadian brand, sort of highlighting and amplifying that story of things that are already happening within the industry, and then finding ways to improve, because there are always ways to improve. Like, we're really good and we're getting better, but I think, by sort of changing the way we think about this and looking at it from a different perspective, from outside the industry instead of from inside, we're going to find ways to make more efficient use of inputs, and that naturally results in better margins. And I think when I start to think about the triple bottom line, and like John has already said, it isn't all about the climate. And I think that climate gets a lot of the focus in this discussion because it gets a lot of attention. It's the most it's the most foremost in people's minds. But that triple bottom line includes social and financial sustainability as well, and they aren't mutually exclusive. And as John has already mentioned, like, financial sustainability will be enhanced by doing the right thing with respect to the environmental and the social angles of sustainability. And I'm going to talk about an example of a customer of ours who has absolutely nailed the social piece of this, and is a great example of how that can contribute to your bottom line. So I guess just, in terms of BMO agriculture and how we view this and our role in this discussion, is we really see ourselves as becoming a broker of knowledge. So with, having access to the expertise in sustainable finance with folks like John and his team, we can have meaningful conversations with our customers and help identify opportunities that can help them get to net zero, or to help them find ways to improve their efficiencies and those sorts of things within this conversation. We can be a provider of solutions. We want to come to our customers with a package that includes advice, technology, and capital, and ultimately an increaser of revenue. So implementing this strategy is going to enhance both our own and our customers' profitability. And so we'll get into more of that in the next piece of this discussion.
Okay, welcome back. Thanks for joining us for the second session, where we dive a little bit deeper into the way that we see sustainable agriculture, the triple bottom line, and ways we can structure sustainable finance to align with your capital needs, but your sustainability needs as well. And so we wanted to dive a little bit deeper into what BMO is doing. And so maybe we'll start there in in the space, and then ways that we can tailor products directly for you, and really ways that we're leading the industry in the way that we're providing capital to our clients in alignment with their overall sustainability goals. But firstly, on BMO, as a bank, we've committed 300 billion towards sustainable finance by 2025. And this was a commitment that our bank made back in 2019 when we revised our purpose, announced a new one to boldly grow the good in business and in life. And so over this 6-year period, we are looking to direct 300 billion towards clients that are pursuing sustainable outcomes. Now, when we think about capital to companies pursuing sustainable outcomes, that there's really a wide spectrum of what that can entail. So on the one hand, it could be providing loans. So providing a green loan, for example, to a client who is going to use the proceeds for some green project. So maybe you're putting solar panels in on your barn, or maybe you're looking at your water efficiency and you're going to install a new technology that'll allow you to improve efficiency and use less water. That would be a good project for a green loan, as an example. But there's also, projects where we're financing companies that are green themselves, right? So this may be a regular loan, but to a company that's naturally green. So a lot of our food and egg clients in particular could qualify, like as a greenhouse, for example. We have worked with a couple of clients in particular, and I'll get into some client-specific examples later on, but we've worked with clients where the funding that we provided them, by the nature of the business in which they operate or the industry in which they operate, they're green or they're environmental or they're social for that matter. And that would all form part of our $300 billion commitment. So products are one way that we can align with this commitment. Again, green loans, we can underwrite green bonds or social or sustainability bonds. We can even provide these products called sustainability linked loans, which I'll get into a little bit later as well. But a big piece of it too is around advisory or sustainability strategy. So how can we sit down with our clients and help them devise a sustainability roadmap that, coming back from the first session, that helps them be more profitable in future? So maybe helps them improve their environmental or social performance, but certainly helps them be more profitable over the long term. We are a bank after all, and our clients' interests are our best interests as well. And so part of it is sitting down and saying, here are the key risks that your business faces. You probably know what they are, you as the client, because you live and breathe these risks every day. But we can pull in some of the expertise that we have from talking to investors or talking to customers directly, and just having experts that know the sector in which you operate that can say, in certain sectors, you need to be focused on this. Here's an area that you should be devoting some time and potentially resources to improvement in. And we can design a roadmap to say, if over 5 years or 10 years or 15 years, you can make market improvements against that particular ESG risk, then it could unlock a few different things. One, most importantly, we think it can make you more profitable as a company. But secondly, as well, if you're a public company, maybe you'll attract more investment because we know investors are focused on these same risks. Or maybe BMO can step in as a lender and say, we're going to provide you better terms if you can align your sustainability strategy with your lending facility. So if over time you can increase your performance in certain areas, maybe then we can step in as a capital provider and say, this is the type of client we want to be working with well into the future. And finally, products, we've talked about advisory and strategy from a sustainability perspective. That is part of what we offer to our clients. We also have an impact investment fund where we've seeded the fund with 250 million of the bank's capital. We're investing in early stage clean tech companies, scaling them up and introducing them to our existing clients to solve some of the sustainability challenges that they're facing. So one of the pillars within our impact investment fund is in the food and egg space specifically, looking at the types of clients that are solving for some of the challenges that our food and egg clients specifically are facing. And we're investing equity directly into those companies in an effort to scale them up, get them the necessary capital they need to grow their businesses, and then introducing them to our existing clients to solve challenges that they're facing. So we're really excited about our impact investment fund, and it's part of the suite of products from a sustainable finance perspective that we're offering to our clients. Janine, maybe I'll hand it over to you to talk a little bit about what you're seeing in your line of business.
Sure. Thanks, John. So I guess again, just taking the lens of how our ag vertical is looking at this, because it was an education process for us too. So we really felt the first thing that the first sort of step in this whole process is being engaged with the industry. Like, we're not suggesting that we're going to create or tell you what the appropriate production practices should be and that sort of thing, or what the sustainability checklists or whatever need to look like. But we want to understand what's happening out there, and we want to help help share that information throughout the industry, really, with customers at all different points in the value chain. And so, that's through part of John's work with the National Index for Sustainable Ag, and with becoming involved with the roundtables for sustainable beef and sustainable crops, and just understanding what's happening out there, and then helping share that information, and taking that education then back to our team as well, and education in terms of what sustainable ag looks like, or what it actually means, but also education about what else is happening in the world, in other industries, and all those sorts of things. What does sustainability mean? And so educating our team members about that, so that they can have really good conversations with our customers about it. And then taking it out to our customers as well. So, giving our customers access to people within the bank like John with expertise in those areas, and with our Climate Institute, who are looking at lots of different sort of tactical ways to approach sustainability. And I think the next piece of all this, in terms of how our group is approaching it, is communication, so internally and externally. So connecting sustainable finance with our customers, being able to recognize those opportunities for both the bank and for our customers, and then amplifying the ag story out there, because like John said, there's lots of really great things that are already happening out there. And sometimes it's just an issue or a matter of semantics, or an issue of what language we're using when we talk about these things, in order to make, to realize, I guess, that we're aligned. And then finally, measuring and monitoring. And I think that is really the critical piece of any sustainability strategy, or any sort of approaching this at all, is to say, where are we today, and where do we need to get to? And then how are we doing that? How are we going to do it? What's the roadmap? So like John said, just throwing it back to that. So that's basically our strategy from the ag perspective within the bank.
I'm glad you mentioned the Climate Institute specifically, Janine, because that was part of an announcement that we made earlier this year as a bank, where we've stood up this Climate Institute, which is a group of professionals that are actually going to roll their sleeves up and get involved with our clients in specialized sectors, certain sectors specifically that are either high carbon intensive sectors, or just otherwise exposed to climate risk in future. And agriculture is one on that second piece around climate risk, where it's really critical for the Climate Institute to be paying a lot of attention to. And they've actually created this platform in partnership with an organization and a technology called Climate Engine, where they can predict future weather events based on AI, and using a track record of historical weather in certain regions. They can predict future facing weather events like forest fires, floods, hurricanes, etc. And with pretty high degree of accuracy. And they're using this Climate Engine platform, is powered by Google, and it's a subsidiary of Google, if I understand correctly. And it's this amazing technology that we are now bringing out to our clients to say, hey, you need to be thinking about future-proofing your business. And this is not just companies on the coast. It's all companies, because everyone's exposed in a different way to climate risks in future. And this service through Climate Engine that our Climate Institute offers is a really interesting one, compelling one for our ag clients to understand not only the risks on their operations, but the risks on their supply chains, right? I know everyone in ag works on a sort of just in, just out type supply chain, where if there's disruptions like we're seeing in British Columbia right now, as an example, and others, it can material impact your operations. Maybe it cuts power, electricity to your barn. There's other issues from dumping milk and other things that could come and could happen as a result of these major climate events. And so Climate Institute is one thing, Janine, I'm happy you pointed out, and I forgot to mention earlier on, because I think that's a really interesting unlock and solve for a lot of our clients. And speaking of clients, I just want to touch on a couple of examples, because we've sort of alluded to, could be green loans, it could be these sustainability linked loans, could be financing green companies. Let's give a couple of tangible examples. So Stanton Brothers, which is a large dairy farm in southwestern Ontario, We provided them financing, we have several times, but more recently this year, where they financed 2 biodigesters where they use the power, they used to power electricity generators from organic waste from their farm, and they actually sell some of the renewable natural gas through the grid and make money from that grid. So they're using waste essentially to power their operations on their farm, using it as the biodigesters, and they've since funded a second one. This wasn't a particular client where we said they're naturally obviously green. They're a large dairy farm. This wasn't a client who sort of set out to say, hey, we want to be the greenest dairy farm in the world. But what they did set out to do is say, look, we have projects that we think we can use some of the waste from our farm and turn that into electricity. And oh, by the way, perhaps we can then sell some of this electricity through to the grid as a form of renewable natural gas. Great outcome, right? And this would be a client that we'd look at and say, that's an example of sustainable finance. That's a way that we're able to finance you that aligns with a great environmental outcome, but actually unlocks profitability for Stanton Brothers as well. So that's an example of what we would consider sustainable finance. Also, I mentioned sustainability linked loans earlier, and keeping in the dairy theme, we actually provided $1 billion sustainability linked loan to Saputo earlier this year. And the key thing with a sustainability linked loan, it's a regular financing vehicle, except for the fact that the interest rate that Saputo pays on the loan can be reduced if they achieve certain predetermined sustainability targets. So for Saputo, that was around greenhouse gas emission reduction, as well as water usage, so lowering their water usage. And if they achieved it over time, over the 5-year facility, then each year they could unlock a potential discount. These sustainability linked loans are a really interesting product that we're bringing to clients that are really committed to sustainability, and that was certainly the case with Saputo. But this is the case where we as a lender are, we have skin in the game too, right? We're saying we're going to offer you below market or preferential rates if you can improve your sustainability over time. We're not asking you to be a solar panel company today. We're acknowledging perhaps you're a big dairy, but we can, if anything, you have the greatest opportunity, you and several other of our agriculture clients, to make these improvements over time, which really move the needle as it relates to climate change and global warming and all these issues. So a sustainability linked loan is a really interesting product that we're able to structure for Saputo. And finally, I mentioned greenhouses earlier. Financing we've provided to Nature Fresh and Lakeside, for example, a couple of greenhouses in Ontario. We've had the opportunity to then profile these companies in BMO's annual sustainability report, really highlighting the great things that they're doing from an environmental perspective, as well as creating food that then, helps keep all of us nicely fed. But this is an example of, again, companies that are in the food production space that are growing food in a really innovative and energy less intensive way, and that we're really happy to be able to be supporting, and would also obviously look for more of these types of examples. And I would love to have conversations with all of you to the extent you think any of your businesses qualify. But Janine, maybe I'll hand it back to you. You have a really interesting variation on some of these sustainability products that I'm talking about.
Yeah, absolutely. So, and again, and John, those are great examples of sustainability from the carbon and emissions standpoint for sure. But we talked about before the fact that social is part of this whole ESG discussion, and it's an important part. And I was having a conversation with a customer of ours, a couple of weeks ago. But he's somebody who's always impressed me in terms of his attention to that piece. So the customer's name is Ian Goodbrand. He has a vet clinic out in East Central Alberta, out in Provost, and has had for it's a very successful bovine practice, has been for a number of years. And one of the things that he did, and it's getting a lot of attention recently, but he hires a lot of has worked with a lot of female vets over the years, and likes the way that they're great with animals, they're great with customers, they're just, very important members of his team. But it was very difficult for them to come back to work after they had children, and not wanting to have to choose between a family and a career. And so taking a look at that and understanding that was going to be an issue for them, Ian bought the bought a lot near his vet clinic, actually right in the same yard, and built a daycare. So these women can come to work, bring their children to work. Their children are right there. They they go do their job, do a great job at their job, and they're knowing well that their kids are looked after, and that they can pop over and if something, if they need attention throughout the day, it's easy to get there. And it's just something that makes it easier for them to come to work and do their job. And as a result of that, he's experienced far less turnover than other clinics have. He doesn't have an HR issue, which is everybody is experiencing challenges in terms of keeping and of retaining, finding and retaining long-term employees. So by noticing that, paying attention to it, providing a solution for it, he has solved his HR issue. And we were just talking last week, and one of the things that he said that stuck in my brain was, you can't think a quarter at a time. Like, he takes a really long-term view to all of the businesses that he's involved in. And I think that's really the key when we're talking about sustainability is, in whichever aspect of it we're looking at, it really is that it's not quarter by quarter. And that's not how this industry has ever operated. We were talking about, if there's anyone, you think about a fourth generation family farm, like what says sustainability more than that, right? Than an example like that. So I think, like John said, that we've got examples of where sustainable finance has been applied to processors or to different types of operations within this space. But I think, we can create examples of that in the production ag space, in the grain and oil seed space, in the cow-calf space. I think there's tons of opportunities for us to continue to apply those principles that we're seeing in the greenhouse area and with that we're working with processors, and bring that on down to the field, quite literally. So thanks, Don.
I love that, Janine. That's a great example, and that's really the breadth and the spectrum of how we think of sustainability, not just at BMO, but broadly in the market. There's way too much attention paid to the environmental sustainability. Again, I'm not going to say it's not important, but I think for me, especially in agriculture, like social sustainability, again, understanding this idea of like generational farming and family farms, et cetera, the impact that they have on rural communities that farms have is so critical. And it's so important to how we function as a society. We need food to operate. We need food to live. And so I think to me, these social type risks, particularly around sustainability, but social opportunities really, that if you're thinking about them well in your operations, especially in agriculture, I think you can really drive great outcomes. And your example is a perfect one. Another area where we see a lot of push down, frankly, and I mentioned customers as an example earlier, saying customers want food traceability, or customers want to know exactly, if it was grass-fed beef, et cetera. That's important. But I think when I think of customers, and I meant to allude to this earlier, but it's also large purchasers. So you have Walmart as an example, one of the largest purchasers in North America, that just put in a 600,000 supplier sustainable supply chain finance program, where essentially they're saying to their 600,000 suppliers, if you are a good ESG performer, you will get better pricing. And if you're a poor ESG performer, you'll get worse pricing. And they've identified for their 600,000 suppliers something like 100,000 different sectors and quadrants and the most relevant ESG issues for each one. And they've actually tailored them to say, if you're an apples producer and an apple supplier, we want to know that they're healthy, there's no pesticides on your apples, that they've been shipped in a sustainable manner, that you use minimal amounts of water in growing and things like that. And they've identified 4 or 5 characteristics that they consider to be most important. I raise that because we're all suppliers in one way or another, right? And so especially in agriculture, it's going to become an economic imperative and an opportunity for our farming clients, as an example, to make sure that they align with the large purchasers and what their criteria are, because they're pushing down their sustainability agendas. Of the Fortune 500 companies right now in the US, 498 have a sustainable finance commitment, have a sustainability program, or publish an ESG report, which they talk about, the nature fresh and the lakesides of the world, and say how great they are. And so all that means is like going forward, this isn't something they're going to move away from. Investors are leading it. So big public companies are really driving towards it. But I think it is going to be something that continues to be top of mind and really could become a differentiator for you and your business if you focus on the right types of ESG areas. One other thought I wanted to leave with is, when we sit down with our clients, and let's pick a canola farmer as an example. The conversation doesn't go from canola farmer to BMO, hey, I want to reduce my greenhouse gas emissions. How should I do it? The conversation goes, my electricity bill is too high, or I'm using more water than ever and my water bill is high. What do we do? And I think where we can step in as a bank, but as an advisor as well, is provide some solutions that we think could work for our clients' businesses. So if we can say, okay, you're using more electricity than ever, we can point to the fact that wind and solar powered electricity now is cheaper than even natural gas powered and generated electricity. Is there something over the medium long term that we can help, again, triple bottom line, help your economic profitability over time by saying, here's the solution to help you save on your electricity bills, maybe not tomorrow, but in 6 months and for the next 6 years. Here are ways that you can do so. And we can bring some of those solutions, again, through our impact investment fund with companies we talk to, clean tech companies, through the Climate Institute, the boots on the ground that are really devising solutions for our clients, and just generally from the expertise that we have. So if you're sitting on the other end thinking, wouldn't even know where to start from an environmental or social perspective, it's all just jargon to me and it doesn't matter, you're not alone. It's all of our clients who are basically all in this together saying, we don't really know what to do, but we're open to solutions, particularly if it can drive revenue. And I do think that's where our bank can come in. So if there's one thing I can leave you with, it's really, thinking about sustainable finance from that triple bottom line context, saying, yes, I want to improve the environment. Yes, I want to help out from a social perspective, and I want to do good in the community and create well-paying jobs, et cetera. But I need to be profitable. And to do so, it requires a total look at your operations with an eye to the future, skate where the puck is going, to say, how can you best align yourselves for the future? How can BMO help you in doing so, in devising products, creating strategy, providing our different advisory services? We are always here to help. And just please give us a call, because we have a lot of different ideas about ways to help you align your business for the future. So thank you.
Thank you, John. That's fantastic. And I don't want to, I can't add a whole bunch to that, but I think the only thing I would finish with is just to say that BMO's been banking agriculture for 200 years. We believe that we will continue to bank this sector for at least the next 200 years. We're excited about the things that are happening in the industry today and how we can help connect with those sustainable solutions. Thank you.